Disclaimer: this is not financial advice. This is merely my opinion based on the research I have done. Investing is a topic few discuss about and is widely viewed as a very difficult skill to master. I suppose this is why many naively entrust their funds to financial advisors for an annual 2% management fee. Naive, as it can cost you over hundreds of thousands of dollars in your lifetime, assuming you invest $500 monthly with an annual return of 7% in the S&P 500, which is already quite conservative, as your monthly investments would scale up as your salary increases. As you can see from my investment calculator, a management fee of 1% is way more than 1% of your profits. Due to the rule of compounding, and it takes about 23% of your profits, what more a 2% management fee? That being said, I'm not saying that financial advisors are unnecessary. If you have a complicated portfolio that requires regular rebalancing, which involves the selling and buying of some stocks in your portfolio to ensure your level of risk exposure aligns with your objectives, please consult a financial advisor, one that asks for a flat fee and not a percentage one. What are my recommendations? I recommend investing in the S&P 500 index fund. Finding one with low expense ratios. For US citizens, I recommend the Vanguard S&P 500 ETF with a low expense ratio of 0.03%. Based on my calculations, your profits barely take a hit in the long term, which is great, not even 0.5%. Why S&P 500? This is because the average annual return since 1957 is 10.33%, and when adjusted for inflation is 6.33%, which is pretty decent, at 6.47%. Some of you might rather invest in private equity or stocks you think that can have high potential, but let me tell you the hard truth. You're almost certain to fail. According to Investopedia, almost 90% of funds underperform the S&P 500 over a 10-year period, and you can expect the number to be way higher over a 30-year period. While it might be possible for some funds to beat S&P 500 in an individual year, it can't do so consistently. Personally, I invest in the iShares Core S&P 500 UCITS ETF (CSPX) with an expense ratio of 0.07%, more than double that of VOO. I do so because there is a 30% dividend withholding tax for non-US citizens. An Irish domiciled ETF reduces withholding taxes paid to US government from 30% to 15%. Apart from S&P 500, I plan to invest in Berkshire Hathaway Incorporation (BRK.B) that is being managed by Warren Buffett, as it outperforms the S&P 500. While Warren Buffett has announced his departure from CEO role by the end of 2025, I still trust in its management. If you have watched till here, I would like to thank you for staying, as 99% of people will have already exited the video. Now you must be wondering, what platform should I use to buy the intended stocks? Ideally, you should search for brokers with zero to minimal commission and trading fees, and allow you to hold stocks to perpetuity. Currently, I use SYFE, SYFE, as it allows me to hold CSPX to eternity without having to buy and sell every 90 days like quite a few of the brokers that I was able to find. While I would like to address how investing can be hard, I'm kind of tired now, so comment for part 2 if you want to know. And also, if you have anything that you want me to talk about regarding investing or whatnot, comment in the video down below, and see you in the next video. Thanks.